Bring in Schwab's Ann Sonders now. She joins us on the CNBC Newsline. It's good to have you on as well, Ann. Welcome back.
Thank you.
Your thoughts on these
Scott.
markets?
Yeah, I mean, it's not a huge reaction down. We've had obviously worse days just tied to trade news, but if you look historically at other surprise military attacks, you do tend to see a big downward move on the day. The two biggest ever were most recently September 11th, maybe no surprise there. And then when North Korea invaded South Korea, you had both about 5% drop, so much more significant. And then it's a question of what happens to oil prices. Is it on a sustainable basis? For instance, September 11th, you had the spike in oil prices initially, but then oil prices rolled over as recession fears took hold. Turned out, we didn't know at the time, we were already in recession. So it's the sustainability of the oil price move, and does it add to downward pressure on the economy that ultimately defines how much worse it gets for the equity market. Outside of that, you tend to see fairly quick rebounds.
You know, I'm thinking about what Cameron Dawson said, making the case that this potentially puts the Fed in a box. They're stuck because if you do have this escalation of the tension in and of itself, if you do have oil prices continuing to rise, and thus you're once again worried about an inflation picture that seemed to be all but tamed to this point, then you now have to introduce the idea that you don't have the Fed on your side as you thought you did just 48 hours ago.
Well, it's a question, though, of the growth side of the equation, too. So, yes, all else equal, this puts upward pressure on at least headline levels of inflation, less so on core levels of inflation. But even within core levels of inflation, you've got forces moving in the opposite direction. You've got the prospective force on the upside of inflation tied to tariffs. That's still somewhat unknown. You've got the downward pressure coming on the shelter components of core CPI. But now you have this headline pop on the upside. But sustainable moves up in oil put downward pressure on growth. It starts to impact the labor market. That might give them the leeway to start to ease. But you might be in a situation, you're absolutely right, where their dual mandate, each one is moving in the opposite direction, and it does put the Fed potentially in a bit of a pickle.
Sounds like, if nothing else, you would not be surprised in any way by an increase of volatility in the days, certainly, but maybe even weeks ahead.
Yeah, no, that's kind of a no-brainer. I think we were facing volatility anyway, just because of the move now between here and July 9th, when the reciprocal tariff extension expires, potential court rulings, and now this. So, yeah, I think more subdued volatility recently. I think that ship sailed for now.
Ann, I'm going to let you run. We rely on people like you at times like these. Thanks so much for coming to the phone. Ann Sonders of Charles Schwab.
Scott.